You got to ask yourself, as you said, why is so much gold coming into America? Why is nobody selling their gold in America? I'm actually surprised that the gold price hasn't already shot through $3,000 an ounce, because if you can't get hold of it, then why isn't it even at higher prices than it is now?
You're right. It should be. Again, the price is still quoted or controlled by the futures market instead of by the physical market. That will change, and you can see how that is beginning to change. And to be naked short would be very silly right now in physical gold and physical silver, and it's even worse in silver. In the LBMA, they have 290 ounces of silver. Last I checked for the float, 300 million ounces of silver for the float, and they trade upwards ends because they say about 290 million ounces on average, but they say those numbers are up to 10 times understated because they only post the final settlement numbers, meaning they're trading upwards ends of 3 billion ounces a day on a 300 million ounce float. And you're talking 90% paper again. It's insanity. That's 3.5 times annual global mine supply every single day. So at some point, these markets, which I think part of the reason that this is happening is the delivery mechanism is being exploited.
They don't pay attention to this, that the gold price up 44% in the last 12 months. What is going on?
Yeah, and that's by design, I would argue. There are very well-read people that live in my neighborhood here, financial advisors and whatnot. They read the wrong stuff, arguably, and they've learned more and more about less and less till they're experts on nothing, in the respect that their focus is so singular that they fail to see things that are happening right around them. But the media really is to blame for that as well. And I want to talk about what's happening in the United States and in London, and how it relates to what's going on with the gold market. A premise just to set. When we talk about the London bullion market, Jason, I saw a statistic the other day that kind of blew me away. They have 279 million ounces of gold stored on paper at the LBMA, custodied by the Bank of England. But there's only 36 million ounces that are available of that 279, meaning some belongs to the Bank of England, much belongs to the ETFs and the Bullion Vault and other encumbered parties. But get this, that 36 million ounces of the 279 million that they have stored on paper is written against 380 million ounces in outstanding spot contracts.
Not only is there a drive to get gold and silver, which gold is the only other tier one asset in the world, but they've lost globally faith in the West, whether it be England or the EU or the United States. So all of these players are taking their toys and going home. Give me my medal. I don't want to leave it with you anymore. India just brought 100 metric tons home from the Bank of England that they've held since 1991. They're bringing all their toys home, not only from the U.S., but also the Bank of England. And this is no longer about we trust you. It's about show it to me. And that's where things get really interesting very quickly. So I think this will be a very interesting year, more so than people expect. I think it could be really, really kind of frightening, exciting, interesting to say the least. But that is a Chinese curse, you know.
That is true. Okay, I've got one last question here, and then I want to show off some of your awesome packaging because I got some shipments in from Miles Franklin, and we're gonna talk about that for just a minute too. But here's the last question I want to hit on real quick, Andy. Francis Hunt said on Palisades YouTube interview, buy gold now till ratio 75 to 1, then change back to gold when it's 15 to 1. So maybe just some clarification on some of your strategies in the past that you've looked at with the ratio and how to play that a little bit. And I don't know, anything else you want to share?
Francis is a smart dude. And I think it's a opportunity of a generation. And I don't say that lightly. For 5,000 years, the geological ratio was 16 to 1, 16 ounces of silver to 1 ounce of gold. Even when Sir Isaac Newton was figuring out the relationship between gold and silver for the mint, I don't know how many 200 years ago, he used a 16 to 1 ratio. And once we hit the Industrial Revolution, largely because gold was money and silver industrial and storage and logistics, man's ratio moved to roughly on average for the past 150 years, about 42-1 on average, sometimes higher, sometimes lower. The geologic ratio stood at 16-1. And silver, like your skin is epidermal, is found in nature in a form called your skin is epidermis. Silver is found in nature in a form called epithermal, right near the surface. Big deposits were found forever ago. I've had the good fortune of having dinner with Keith Neumeyer a few times and getting to pick his brain. And he said, man, there's only a handful of silver companies out there. Most of the silver that comes to market, about 75 to 80%, is byproduct. I think the BRICS are quietly continuing their union, much more opaque than transparent after the BIS, Bank of International Settlements, who had been instrumental, their innovation hub in developing Mbridge at the 12th hour, pulled out of it after it was fully operational, saying they can't be party to a group of countries where one of them is being sanctioned by the West. Well, or more, and they just realized that Russia's the R in BRICS, and that was espionage in my mind. They spent 4 years developing it, Chinese technology, the innovation hub of the BRICS, and screwed them at the 12th hour. We just saw yesterday or the day before Iran, China, Russia doing joint naval exercises. We've seen Indonesia become a full member of the BRICS, have the largest nickel deposit in the world. They're continuing very quietly their expansion. What I noticed that I figured was at least worth talking about is that you have a Russia, China, and Iran joint naval drill right now going on. And I think the shared interests of countering the U.S. influence, whether it be with the U.S. Navy militarily or on a broader sense, globally as a this trend of moving away from the dollar and the hegemony and the influence is continuing. There will be things to talk about month over month, and there will be I believe a emphasis on a Western slant on all the media reporting to make it look like it's nothing. But they are not ending their aspirations. And when you see joint naval exercises again between Russia, China, and Iran, that should carry a significance. That military exercises certainly sends a message, when you have these three entities collaborating, and makes you wonder, when two of the three are nuclear powers, how far behind is Iran now that they are joining in this endeavor? These are things that should be taken again very seriously. And maybe this is part of the reason why all of a sudden you've seen this this massive shift from risk on to risk off, just like that. I mean, I've never seen such a shift from massive euphoria, risk on, everything's amazing, to all of a sudden you look at the insiders and the hedge funds that are moving away from this. It's almost like these people know exactly what is coming, just like Jamie Dimon does, just like Warren Buffett does. It's not going to be an easy transition, an easy lift for whatever Trump wants to do. And I don't think he's dissuaded these countries from continuing on their agenda, just maybe in a little bit more opaque manner, not so much in your face. Even though this is kind of in your face, it certainly, I think, is worth mentioning that, yeah, this means to me that they're still moving forward with the agenda.